Another day, another rally for stocks, including today's gains. The S&P 500 has rallied more than 69% off that March low. But Trim Tabs Investment Research CEO is advising clients to stay neutral on U.S. equities. Why? Well, because he cannot figure out who's doing the buying. In fact, he believes there's a possibility the Fed or the Treasury's manipulating the stock market, buying up equities to push stocks higher, creating an artificial sense of confidence in the U.S. economy. Now, Charles Biderman joins us now from his office in Santa Rosa, California. Welcome to you, Charles. I know you say you have no specific proof of all this, but tell us why you think this is even a possibility.
Well, we've never seen a market rally like this where there's all the following is not happening. Individuals aren't buying. We've seen U.S. equity fund outflows of like $50 billion in the last 5 months. Pension funds have not been buying, according to some of our bigger clients who are at major trading desks. Hedge funds finally started to get some inflows recently, but they've been having massive outflows all of last year up until November. So, you know, ETFs haven't been buying U.S. equities, or people haven't been buying U.S. equity ETFs. And companies have been major sellers of stock. So historically, we've never seen a rally in all the years we've been tracking since '87. We've never seen a rally where we can't figure out who's doing the buying. The market cap is up $7 trillion from the low. Historically, you need somewhere at 500 to 800 billion of net new money to take stock prices higher, and we can't find any.
So explain how these stock purchases then are being executed. How are they pulling this off, if it is indeed the U.S. government?
Well, somebody is buying futures. That's what it looks like. All the gain in the stock market has occurred after hours. The futures pit opens 15 minutes after the market closes, and the futures pit opens 15 minutes after the market closes and shuts down 15 minutes before trading begins on the NYSE in the morning. So if you add up all the gains from March, almost all the gains in the market have occurred overnight. The gains from where the futures close in the morning till the market closes in the afternoon have been negligible. So that says that all this activity is occurring in the futures market, which is leveraged at least 10 times. So to get 600 billion, 700 billion of buying power, you really only need 50, 60 billion, only 50, 60 billion of buying futures, which is a sum beyond normal people's ability to come up with. But the Fed certainly has it. Are they doing it? We have no idea. Somebody's doing it. We just don't know who.
Now, the Federal Reserve, as you know, makes such a big deal about its transparency, right? So isn't there a balance sheet somewhere that might show these purchases?
Well, I think there's this outfit called Bloomberg that's suing the Fed to try and get what's on their balance sheet. We don't know what's on their balance sheet.
Well, we know it's a lot of MBSs, right? Majority so.
Yeah, but 50 billion is, you know, the balance sheet of the Fed has grown by $2 trillion. 50 billion is peanuts compared to that. The other point is we just don't know.
Right. Okay, so the government, go on, Charles.
Well, the other point is if the Fed said they were buying, who would trust a market where the only buyer is the Fed? The market would crash. So they can't disclose that they're the buyer if they were the buyer. Or whoever's the buyer can't disclose that they're just the buyer. Because, you know, if there's only one buyer, that wouldn't be good for the market.
I know you're explaining this right now, but is it interesting to you that the government's been so public about all of its post-crisis programs, stimulus, bank bailouts, mortgage remodifications? Why not this?
Well, because if they were to disclose it, the market would crack. You know, the other things didn't work. If you go back to March, you know, they were talking about all these plans. There's only one thing they didn't have a plan for, and that's the stock market. So they didn't say maybe we should lower margin requirements, maybe we should do this to help investors. Barack Obama said people should buy stocks in March, and that was the only comment about the market, and the market took off.
Hey, Charles, I want to read you one. I got a viewer email as you were chatting saying, let's be realistic. They have bought every other asset class, meaning the Fed, I would assume. The buying is most likely indirect by authorizing the dealers to buy futures and guaranteeing against losses. I think that's what you were describing earlier.
Yeah, it's possible. I mean, that's what my guess is what's going on. And some of them, you know, we have 13 of the 30 biggest hedge funds as clients of ours, and none of them have said I'm crazy. Some have said they agree with me. but nobody knows.
Okay, so what happens if the government decides to sell? It's not going to be in bulk because, as you described, that could cause a crack or a crash even.
Well, even if they stop buying, what's going to happen if they are the only buyer? I mean, you've seen, any time there's been a crisis in the market, whether it's the Greek downgrade or any other thing, the prices go down and then they come back up later in the day, and it's led by futures buying. So somebody's buying and ameliorating the crises in the market. My guess is that, there's the so-called wealth effect, where if the market's up 6-7 trillion, some people are spending more because they're making more. Certainly Wall Street bonuses are up, and they're spending, or presumably they will be spending their bonuses. But if, maybe after 3 quarters of higher GDP growth, maybe the government will stop buying, or whoever it is will stop buying, and the market will crack. And at that point, hopefully the economy will be doing better. If that might be the whoever's doing the fixing, maybe that's their game plan.
So all of this, I would imagine, makes you a little cautious, to say the least, buying equities today.
Yeah, companies are heavy sellers. Individuals are heavy sellers. Jim Grant, a former Barron's associate of mine, might be thinking that borrowing is going to come back, but we see bank borrowing plunging. After-tax income keeps plunging. We see no recovery. The real estate market is horrible. What happens when the Fed stops buying mortgage-backed securities? We have no idea, but it can't be good.
So how else might the government be skewing the outlook, whether it be in the economy or markets, to achieve this psychological perspective of stabilization?
Well, they're talking, that's all they can do is talk, other than if they're not buying, somebody's buying, and they're talking up their book, which is the economy, which is the market, and hopefully people will respond. But, we have a situation. The last time 1 out of 6 people were unemployed was the Great Depression, when it was 1 out of 4. And, this is, and we don't see any hiring going on. We don't see anything getting better. I wish there were. I wish I didn't have such a gloomy picture. I'm not happy about this, but I don't know what else to do.
Well, we certainly appreciate you sharing your theory with us. Charles Biderman, of course, the CEO of Trim Tabs. Thanks again.